Well, that's a bad AMC. This pen doesn't work. Hello, traders. How's it going? Welcome back to StartTrading.com. I'm Mark Bauman. It's time to get it. We're talking to AMC. Hit that like button, subscribe button. Let's talk about AMC today. So, is everybody hyped and jazzed? Did you buy those call options yesterday? Did you buy those shares? Did some of your shares exercise last Friday like mine did? Because, yeah, up like $10,000+ today, which is nice, despite my puts, which are still in play. So tomorrow, what can we expect? And are we going to hit 100? That's the main question. And when are we going to hit 100? Is it safe to get into AMC? What is the prudent investing decision in something so irrational and so irregular and nonsensical? Well, I'm giving you guidance on what I did, and you can make your own decisions. There's all kinds of different logical decisions you can make. If you firmly believe that's you got to have a strategy. The main point of this is always have a strategy. Okay, that's what the lesson is today. Strategy A is going to 100. So I'm going to invest until it hits 100 and then I'm out. Strategy B, it's going to make it maybe to 100 and then crash. So I'm going to sell on the way up. Strategy C, sell on the sidelines. Or strategy D, it's going to 1,000, YOLO, I don't care about my money. Okay, now you can implement all kinds of sub-strategies within these strategies. So for example, if you're going YOLO and you think it's at least going to 100, if not 1,000, then why not buy into the 100 concept, and then once it passes 100, sell some of your position, but hold a majority of it, but just so you don't lose all your money, or at least your original investment. You can probably get that back at this point because it's up 100-something% in just one day. So do stocks jump 100% in 2 days or 3 days? Well, if you take a look at GME, that stock did on their run-up. So will GME be a example for AMC at this point? I think yes. So your strategy can change if you look at GME and just use your little cursor when you're looking at the statistics through your application, whether it be WeBull, which you can find links down below in our description to sign up for, because you can trade after hours and pre-market. Or will you then decide after looking at those that, hey, it's going to pop maybe one more day, and then the suits are going to bring it down, and then they'll let it go back up again, and then they'll crash it again. Now, theory one is today, it was hovering around 40, 41, nobody was selling. But there wasn't that much buying action. Then all of a sudden, did the suits just buy in? They shoved it all the way up to 60-something, 70-something dollars? Or were they just waiting to see what our threshold was? Was the total cap of all investors like ourselves that are independent investors, retail investors, where the hell that means, independent investors that purchased all the way up to 61 or 70. And that's the entirety of our entire budgets that we could stomach and be able to plug into AMC, and now do the suits know that? And now they can push it up a little bit higher themselves, wait till some more of us get in, and then crash the sucker. Those are two different scenarios that could plausibly happen tomorrow. So, what are the best ways to protect yourselves? Well, in my case, I bought some call options. I think I have 3 now, going in the 2036 range. I had originally sold at 14, where I thought I was going to pop and drop again. The squeeze, because of the ability for hedge funds to have unlimited supply of cash to be able to manipulate the market up and then crash it back down, just does not sit well with me. So I play it relatively safe, doubled my money, got out again, and made money before. Great. Then I got back in at 26, 30, 36, and I bought a call option that canceled on me. I don't know why. Still have to go back and research that, in the 50s. So I was a little upset about that today. But nonetheless, still have my call options in there, which I'm kind of stuck in. You could set trailing stop losses on your call options, but those are very risky. So you want to set that like a 30%, probably 30% or higher trailing stop loss. But on your general shares, AMC seems to be fluctuating just around 20%. So if you set it at 25%, you can maximize your profits and not lose in case it drops. Now if it dumps and then you see it plateau, that's an opportunity to get back in because it's going to pop back up most likely. Okay? It could drop and plateau because the retail investors are hodling, and the suits are trying to shove it down. So if you get scared when it drops, just look for that drop line. If it drops 50%, you're out anyways. And if it drops 50%, you got out 25%. You can reinvest that other 25% and 10x your reinvestment, providing you're not pulling your profits, and buy call options. So hopefully you're following me. So if you had 100 shares, you doubled your money already, you set 50 shares on a 25% trailing stop loss, you leave the other 50 there just to hodl, drops 50%, you got out here, is down 50% now, you can buy a call option with these profits that you already have and get back in it, which then 10x your investment and 10x your exposure, as well as 10x is the support into AMC to get back in with the game. So that is a plausible situation to happen tomorrow or Friday or Monday. If you take a look at GME, you'll see that it scales all the way up to the $300 something mark, that it pops all the way down to $100 and something, $120, $110, I believe. And then I'm sure we'll add a little graphic to this. And then it goes all the way back up again in the 200 something range, hodls around for a little bit and gets crashed again. What's happening there? Again, you've had the hedge funds that are buying their own shares just to bring it back down to take advantage of that put. They're waiting for you to everybody to culminate, all the honeys to get around the honey pot and then crush the honey. Okay, so watch out for that. All right, set yourself up protected, but stay within AMC. You want to support the cause because we want to give it to the suits. I'm for that. Robinhood, I hate them. At this point, let's see what happens in this investigation and whatnot. I do not like them, but they do have a great learning center in that they walk you through each of the different investment options and what they mean, how to use them when you're making your trades, which is really great. But WeBull just added that to the platform as well. So click down below, get your free stock. You can contribute back to the channel. And if you'd like the information that I provided you today, please hit the like and subscribe button. And as always, go to starttrading.com, get some free education. Great time to get educated when the markets are down like this, as well as figure out ways to invest your money intelligently. That's Mark Bauman, starttrading.com. Thanks for watching.